Remember when you were in high school and you had all the different types of friends and cliques that you could hang out with? No, I blocked it out. But when I was in high school though, I got along with everybody because of this one secret. I had these M&Ms, so if I wanted to make more friends, I would just give them more. And if they didn't like that, I would just give them Skittles instead. And I knew the cheerleaders really liked the sour Skittles, so I gave them that. But the nerds, they were the hardest because I'd have to give them Doritos. Good. Hi, my name is Andrei Jikh. Hope you're staying safe, hope you're doing well. And the stock market has been on fire, with last week being the worst one since June, with the S&P 500 down 3.5%, the Dow 2.8%, and the Nasdaq 5%. So today I wanted to put together this list of the top 10 most traded, most popular stocks on the Robinhood platform because I'm dumb. When it comes to learning this stuff, it's always been so complicated and hard for me to learn because people would throw complicated finance words and numbers at me and I just didn't understand. So I'm gonna give you very specific examples and exactly what they mean to see whether or not these stocks are good to buy, because the people that were teaching me were too busy trying to impress me with their knowledge and then getting me to buy something from them rather than trying to teach me. So hopefully you'll find this very useful because it took me forever to make this video, and here we go. And the number 10 is Amazon. No surprise there, even the ticker symbol is amazing, but Amazon's market cap is $1.65 trillion. The market capitalization, by the way, is the value of all the stocks that are out there in the stock market combined. And if you're not sure if that's good or bad, think about it like this. You're playing Monopoly, it's like that one friend that owns all the spaces and all the hotels, and anything you land on, you basically go broke. That's Amazon, and they are so far away from anyone else, no one can even touch them. They have a monopoly on this space. Just check out the numbers. EPS growth in Q2 of 2020 was 97%, which is crazy. If you're not sure if that's good or bad though, 25% is usually considered really good, and that means that that company's products are in high demand. So 97% for a company of this size is crazy. Sales growth, almost equally impressive, at 40%. You should aim anywhere between 5 to 10% for a company of this size, which is a large cap. A large cap means large market capitalization of $10 billion or more. The weak side of Amazon is its operating margin, which right now is only at around 7%. An average is about 10% in the stock market, and a really high one is 20% or more. And coming in at number 9 is NIO. What if I told you that Tesla was just the blue pill and NIO was the red pill? I think it's pronounced NIO, but it's the Chinese equivalent of Tesla, and this company has been growing very fast, but it's also very volatile. So let me give you a number, 2.37. That is the beta number for this stock. And at a beta number of 1, that is in line with the average stock market that this price goes up and down. But at 2.37, it's a lot more volatile. So if you're going to invest in this stock, then strap yourself in, because where we're going, we don't need roads. Now these guys are where Tesla was before Tesla was profitable. So it's almost like your second chance of owning Tesla before it made it. Except the risk is that they're not profitable, so their numbers are horrible. Like their EPS is negative $3.75 for each share that you own, which isn't good. But their sales growth is up 22%, which means their products are in demand, but it's costing them more money to run their company. One good thing I will say about this company is that it's heavily subsidized, or at least will be even more so, by the Chinese government, so it's not gonna let them fail. And for that reason, I'm out. No, I'm just kidding. For this reason, it might be a good speculative stock. And at number 8 is IBIO stock. In November alone, it was worth a nickel, but at its peak, it was worth $6.41, which might not sound like a lot, right? Like, would you rather have that or a stock that goes $100 to $500? It seems like the second example is more impressive, but check this out. If you invested $1,000 into that $100 stock, you would have 5x'd your money and ended up with $5,000. Not bad. But in IBIO's case, if you bought in at 5 pennies a share and you put in that $1,000, at its peak, it would have been worth $128,200. That's unreal. So don't just pay attention to the actual dollar value, but the overall percent increase as well. The cool part about this stock is that it doesn't have to find the vaccine itself because it has a platform that can mass produce vaccines. And if you can get a license to get the vaccine and make it for others, then the stock could go up even more in value. But it's pretty speculative, so invest accordingly. And at number 7 is TRVN, which is another pharmaceutical microcap company, which personally I'm not a huge fan of because they usually haven't been around long enough for me to really trust them. But what people like to do is they like to speculate on approval of a certain drug. So for example, they'll buy the rumors and sell the news. So because now that you're watching this probably on your phone about this YouTube video, now the rumor is public. So the price has been priced in to be the positive news. But if they don't get approval and things don't go their way, then the stock will fall. So speculate accordingly. And number 6, Rocket Companies RKT, which is the parent company of Quicken Loans and Rocket Mortgage, which just recently had an IPO. Now I actually used them myself to get approved on a house because everyone seems to be buying houses. I didn't get approved because I don't have 2 years worth of stable income just yet. But generally speaking, I stay away from IPOs because they're the hot new thing. They're hot off the press. Everyone's buzzing and talking about it. And usually the price is very inflated. And at number 5 is AM or Antero Midstream. It owns and operates midstream energy assets and is a subsidiary of Antero Resources. And on the surface, the balance sheet doesn't look that good, but no one ever pays attention to the weighing machine. So the popularity on the Robinhood platform though has skyrocketed from 15,000 shares to owning 30,000 shares. And to be honest with you, I'm not sure why that is. It could be because the dividend yield is at a sky high 18%. And that's insane because that's not very sustainable. I aim for 4%, which is sustainable and can grow long term. Anywhere between 4 to 6, maybe 7 would be pushing it. But 18%, the dividend will probably be cut at some point or another, so be very careful investing here. And number 4 is Microsoft. It's climbed all the way up to number 4 because of this recent contract called the Jedi Cloud Computing Contract. Basically, we're all gonna be Jedis now, and the government just wants to make sure to stay on top of the Republic. Sorry, I just like to be a Sith sometimes. But the Jedi Cloud Computing Contract is actually awarded by the government to Microsoft, and Amazon is really upset about that because when you own a monopoly, you want all the squares. Now, this project is estimated to be worth around $10 billion, and it's supposed to basically reorganize the government's tech infrastructure. So they've essentially hired Tony Stark to redo their UI. But besides that, Microsoft's numbers are amazing. Out of all the money they make, they give back 32% in the form of dividends, which is good because anything below 60% is great. Their EPS growth is 13%, their sales growth is 14%, their return on invested capital is actually 26%, 8% is good, and the return on equity is 40%. Anything above 10% is good. And finally, interest coverage is 20.44, and anything above 8 is good. So write all that down or save this video. And number 3 is MRNA or Moderna, which is another pharmaceutical company. So you can see there's a trend about which horse will be the most popular to get first place to find the vaccine. So there's a lot of hype. But there's this one weird thing that happened that you might want to be aware of because the top 3 executives of Moderna have actually sold off a lot of their stock. That's the chief executive officer, the CEO, the guy at the top, the chief medical officer, and the president have sold off at least $10 million worth of their own company. Now you tell me, if you were developing a vaccine and you knew something, wouldn't you want to wait until after to sell that stock because you'd get a lot more money for it? What message does that send to sell that many stocks about what your beliefs are in your own chances of success? I don't know the answer to that, but it's a red flag. Number 2, Tesla. Of course, what can be said about Tesla that hasn't already been said in some form or another in some video on YouTube? But if you didn't already watch my video with Jeremy from Financial Education, you're gonna get a lot more out of that video than in this video about Tesla. But if you don't wanna go watch that video, there's a cool car appearance, so I'll tease you with that. But I know you're not gonna go watch it, so I'll just summarize the video here. Basically what we said was that long term, meaning 5 to 10 years from now, Tesla will probably be worth a lot more than it is today. But in the short term, it's a hot potato. And at number 1 is Apple. Of course, everybody's favorite stock, including my own and pretty much every millennial's. And that's because it has the strongest balance sheet out of all the companies on this list. And when all the companies were reopening their doors for business to make some more money, Apple was like, all right, I'm gonna head out. And as of September 7th, they still haven't opened all of their stores back up. And that just goes to show you, they can keep their doors closed and still pay all their bills on time. They have a 99 out of 100 dividend safety score, which means the dividend is not at risk for being cut. Their earnings payout ratio is 24%, which is incredibly low because you would look for 60% or less for it to be good. And their net debt to EBITDA, The earnings before interest, taxes, deductions, and amortization is 0.24. And just so you know, for context, anything below 5 is considered good, and this is sub 1, which is insane. That means their debt levels are so low that they could pretty much pay off all their debt with the cash they have on hand, except they're just like, no, we're good. Benjamin Graham, the guy who taught Warren Buffett, had a really great quote that is in his security analysis, which would later become basically the golden standard of value investing. And in it, he said that in the short term, the stock market is a voting machine, but in the long term, it's a weighing machine. What that means is in the short run, it's very difficult to determine which stocks will do well because what's popular today may not be popular tomorrow. A weighing machine is much more accurate and will tell you a lot more about which stocks are heavy and which ones are going to determine the true value of what it's worth. So when I invest in a company like Johnson & Johnson, for example, it may not be the most popular stock, but it's a heavy stock because it's returned a lot of shareholder value in the form of dividends for many, many decades. The reason that the stock market has fallen is because of a few reasons, but one of them is that US-China relations are pretty much at an all-time low. And this pandemic exposed to us the fact that everything we produce and consume and we make is pretty much made or tied to China somehow, indirectly or directly. And we're waking up to that fact like, oh God. And now that the US wants to be more independent, guess what that means? That means that the cost for companies is going to be a lot greater now that we want to make things here at home because US labor is much more expensive. And that means less profit for companies, which means that little metric we talked about before, profit margin, is going to shrink, which means stock prices are going to have to go lower. Second, Dr. Fauci said that a vaccine by October is not looking likely. And remember, the stock market was already pricing in a quick recovery. So because things are shaken up, because investor confidence is lower, stock prices are also going lower. Third, the stimulus check negotiations are getting heated up as we're approaching the election, and each side of the political party wants their own candidate to win. So now they want to compromise less and less with each other. Less money for the American people means less spending on the economy, which means companies make less profit, which means stocks go down. And fourth, we've had a huge influx of retail investors. That's people like you and me who for the first time are starting to invest. You're starting to see new YouTube channels talking about money and investing, and because the stock market went down in value, this is their first time experiencing this loss in money, and so they're pulling out and selling more stocks. And those are just some of the reasons why the stock market has been falling. There's probably a lot more that I'm missing that I either forgot about or I'm just not smart enough to see just yet. So which of these stocks are your favorite? Do you own any? And what clique were you a part of when you were in high school? I was actually part of the ROTC nerds. Yep, I was one of those. I twirled rifles, I won state championships, and I was a nerd, but I could also blend in and talk to any one of the cliques, and that's an important life lesson, is that you need to blend in and be able to get along with everyone in life, which is why you should smash the like button. And if you haven't already done so, please create your free account with Webull, fund that account $100, and you get a free stock valued up to $1,600. You get a second free stock from Robinhood. Sign up for free. You can join my free Discord group. It's awesome. Follow me on Instagram. I post from time to time. And join me back here on Monday and Friday, and sometimes a Wednesday. Thank you so much for watching. Stay safe, stay healthy, and I'll see you soon. Love you. Bye-bye.